Forum Daily is back with our market update from Catherine Murray, host of The Buck Stops Here.
Thanks, Dima. Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. Well, we are seeing markets in rally mode today, reversing some weakness that we saw earlier in the week. So some nice strength today, both in the United States and in Canada, with some specific strength in social media stocks, large cap tech, as well as semi-cap equipment names. Also seeing a little bit of a rebound in some of the energy names, despite the fact that WTI, the price of crude oil, has been under some significant pressure this week. Of course, that's on the back of concerns with respect to global demand and global growth. But we are seeing a bit of a pickup today. We're also seeing some real strength in Bitcoin, up by about 4%. I want to bring this up in the sense that Bitcoin has been the best performing asset class year to date, up by about 74%, really on the back of views that perhaps the U.S. Federal Reserve will hold off on raising rates further, that perhaps there's a real pivot that's going to happen, and also, of course, on the back of the Silicon Valley Bank bailout or a failure, and also, of course, yesterday, First Republic concerns there as well on the back of their earnings results. Why does all of that matter? It's because many investors are wanting to hedge their fiat currency, so your traditional money, and move it into cryptocurrencies. So I actually did a special show on that, which will air this Sunday. So take a look at that. And again, I just wanted to revisit the asset class to put some perspective around it, just given the strength that we've seen and really sophisticated investors moving back into the space. Back to the traditional markets, though, we are in the midst of a very, very busy earnings calendar. The key metrics are coming in a little bit better than expected. Originally, when we started the first quarter earnings season, it was expected that the earnings for the S&P 500 would be down 6.7% year over year. They're coming in better than that. They're down 4.2%. So again, better, but still negative territory, just showing what some of the pressure has been for so many companies this year and over the past year, I should say. We have had 47% of the S&P 500 report, so still a long way to go. But some of the highlights that we're watching today, Meta, which is Facebook's parent company, that stock is up 14% today on better than expected results. They beat on their quarterly results, and also guidance came in better than expected. Comcast, also some real strength there, setting that stock up 4%. And Eli Lilly, they had a revenue beat, earnings a little bit light, but their weight loss drug for type 2 diabetes showing some real strength, setting that stock up by 4%. Stepping back, though, as investors are looking at the market, important to note the economic data. First quarter GDP in the United States came in less than expected, up by 1.1% on an annualized basis, but still definitely shows some softness in the broader economy, which might be leading investors to believe that the U.S. Federal Reserve will continue to just be a little bit calmer as it relates to raising rates. Looking at the TSX right now, as I mentioned, it is also up on the day. Most sectors are trading higher. Important, though, to look at our earnings results, and they are coming in with a negative 8.9% for the broad market. So again, some real pressure that these companies have been facing and feeling in the broader economy and therefore their earnings results. Having said that, though, we do have a couple of highlights to mention. CP did come in a little bit lighter. Bombardier had a better than expected results with their quarterly results. And Rogers did show some nice gains in their quarterly results. And also importantly, they're partnering with Elon Musk to deliver Starlink to their more remote customers. So that certainly has helped the stock there. As it relates to other areas within the market, important to point out that the CMHC is highlighting that the high-risk loans have more than doubled in 2022. And I just want to go back to the TSX, the earnings results there, down 8.9%. Important to note, that's the worst performance we've seen versus the 5-year average, 10-year average, and 20-year average. So it really shows some of the pressure that Canadian companies have been facing and also a broader economy. And I know that so many of our viewers have also been faced with obviously the impact of higher inflation, higher costs, and that is also translating into the company results that we see on the TSX. Lastly, I just want to point out Goldman Sachs has some comments as it relates to the systematic flows or the systematic strategies that some money managers employ. There's been $170 billion of money flow globally into global equities over the past month. So very significant there, but they're also pointing out that they're almost out of ammo. So, that's been a help to the market, having that buyer or those buyers. But it seems though that might be to the sidelines now. And I'd also just point out there's another report showing that hedge funds have their biggest short positions in the S&P 500 in quite some time. So that's important to note as well. Could show a little bit of weakness in the market going forward. Nima, I'll leave it there. Back to you.
All right, that was Catherine Murray, host of the Buck Stops Here, which airs Sunday mornings at 9 a.m. Eastern, so be sure to tune in at that time.